Hello, everyone. Mark Kavar here with another Rate Watch report. Take a look at the mortgage-backed security market, get a sense of where interest rates are going, and they're not going in the right direction. Before we kind of look at this technical chart in a little more detail, some of the fundamental news that would be driving rates down, there really isn't anything today. All of it's on the what would be bringing rates up column. Retail sales up, import prices up, business inventories up. All of that's good news for the economy. None of it's particularly good news for interest rates, of course. And of course, we also had a bad 10-year auction that we talked about, and then yesterday the bad 30-year bond auction, um, with which we talked about as being relatively determinative. Um, in how the market would react. And of course, how it reacted was a big, sharp gap down opening, as you can see here. Now, let's just put some of our overlays on here. What we can see here now is that we're very much right here at the 100-day moving average. That's kind of where we've fallen. So the question is what direction, where we will be headed in the near term, or even the longer term. As far as here's the two support lines right here. So there's a little support here at 98.6. So you could see a little bit of a run up and as a consequence, some price improvement. But there is, as you can see also here now, there's these are some resistance points at the prices that we were at as early as this time last week. And of course, so there's resistance just at those levels. And of course, where we were just the first part of this month, which was the best, some of the best rates we'd seen all year. That isn't even something we can even dream about right now. So this is where we're at. As I say, I think we have some room to run up today, because there's some support levels here, but there's really uh, I kind of don't believe that's going to be today based on the news that we talked about. As we see here on where our lenders are reporting in, 81 lenders are reporting in. 75 of our lenders are saying that they're going to have negative pricing relative to rates today. And as we look at our day watch report, down from the very beginning, which of course translates to higher rates as well. So, it's kind of one of those things. If you have to lock because you're getting close to closing, like on a purchase transaction, I would probably say to lock because, while this is a price support up here, there is room down here as well below that. So probably locking is a short thing if you have to. But if you don't have to, I don't know if there's much benefit to lock or to float. Um, Today. And as we look here, if you can see this very clearly, our poll results of the people that have subscribed to the service like I do, that are people in the industry, it's pretty much 50-50 float or lock. So there isn't much an upside either way. But of course, your particular situation may dictate what you absolutely need to do. Anyways, hope you found this information helpful. Have a good weekend, everybody.